want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is David Zahn, manager of the Franklin Strategic Bond Fund. Hello, David.
Hello.
So as well as running a strategic bond fund and several other fixed income portfolios, you're also head of European fixed income for Franklin. I thought today we could talk about what's going on in Europe. There's been some measures over the summer which hope to kickstart growth. Do you think they'll be effective?
Well, I think the ECB has done many different things to attempt to stimulate the economy through the TLTROs or the asset-backed purchase program we're going to have soon. But I don't think any one of these measures will be enough. I think it will be a combination of these measures. And I think it's really how much uptake they get from the banks. And if they get enough uptake, it could move the needle slightly. But I really do think that we are moving closer and closer to outright quantitative easing probably next year.
And how will that work when a single currency landmass such as Europe?
Well, I think the exact dynamics will be interesting to see how those play out. But I do think that they need to have a large asset class that they can purchase, and so I think it will be government bonds to some degree. I know there's a lot of conflict of whether or not this is allowed or not, but I do think that they will get to that point where this is the only way. Inflation is too low in Europe. We're running at 0.3. They're well below their 2% inflation target, and they need to do something, not necessarily get the growth going dramatically, but just keep inflation from getting too low.
And it's a measure that has been so effective in the US and in the UK, and Europe and indeed the Bank of Japan have resisted doing it, and now it seems that Europe is going to have to.
Well, I think that's absolutely correct. I mean, we've seen the US is going to stop their QE this month. Bank of Japan continues their QE, and the EU is going to have to start their QE sooner or later, I believe. And I do think that this also has to be in combination with a fiscal program, which we won't see out of Europe because they're trying to get their fiscal house in order. But I do think there are some of the more core countries that could probably do something more on a fiscal program than what they're currently doing.
Getting down to the nitty-gritty then, you've explained how it'll help to boost the economy. What will it mean for investors, and in particular bond investors?
Well, I think Europe is quite an exciting place for bond investors because if you look at what's going on in Europe, we have slow to no growth, we have low inflation or almost zero inflation, and you have a central bank who's being very accommodative. So I think this means that the central bank will not be raising rates for many, many years, and I think that means that bond yields can actually stay at a relatively low level or maybe even go slightly lower from here. And that's why we like peripheral bonds, Spain, Italy, because they actually may see further convergence onto Germany as you see more liquidity coming into the system.
And of course, bond yields going down means bond prices
going up. Yep, absolutely. So I think this is one of the bond markets in the world that it will be relatively anchored or stable, and you could see price appreciation where I think, in the UK, you probably will see yields going up, prices going down as the central bank starts to move, and same in the US. So I think it is an area where investors can find bond returns and some yields that have a little bit more stability than other places in the world.
David, thank you very much.
Thank you very much.
This is Emma Wall for Morningstar. Thank you for watching.